My name is Jason Parker, and for 6 years I was Senior Portfolio Manager at Alpha Meridian, once one of the most prestigious hedge funds on Wall Street. This is the story of how I witnessed the rise, the corruption, and the spectacular fall of a financial empire, and the man who almost got away with the perfect financial crime. The morning I met Alexander Reed for the first time, the December snow was falling gently outside the floor-to-ceiling windows of Alpha Meridian's Midtown Manhattan headquarters. Reed, a neurologist turned Wall Street trader, had a reputation for making uncannily accurate predictions in healthcare stocks. At just 38, he had already amassed a personal fortune of over $30 million. His perfectionism was legendary. Bespoke suits, immaculate office, and investment returns that defied market logic. "Jason, we've been watching your work at Goldman," said Jonathan Blackwell, Alpha's enigmatic founder, as he introduced us. "Alex needs a senior analyst with pharmaceutical experience. You two are going to make us billions." Blackwell wasn't a man who exaggerated. A former mathematician turned hedge fund billionaire, he had built Alpha Meridian into a $14 billion behemoth through a relentless pursuit of edge, his word for information advantage. His piercing blue eyes seemed to calculate your value with each glance. The $5 million starting bonus he offered me was impossible to refuse. My first year working with Reed was exhilarating. We specialized in healthcare stocks, particularly biotech companies with drugs in late-stage clinical trials. The volatility in this sector was extreme. A successful trial could send a stock soaring 300% in a day, while a failure could wipe out 90% of a company's value instantly. Reed seemed to have an almost supernatural ability to position our portfolios perfectly before these binary events. "It's all about understanding the science," he would explain during our strategy sessions. "Most analysts don't have the medical background to properly interpret trial data." I believed him. After all, he had published in top medical journals and maintained connections throughout the research community. His intelligence was intimidating. He could recite complex trial data from memory and explain molecular mechanisms with remarkable clarity. But in my second year, I began noticing irregularities. Reed would sometimes disappear for days, claiming to be conducting research. He would return with surprising conviction about certain investments, often just weeks before major announcements. Our trading positions would shift dramatically based on his insights, always in the right direction. The pattern became clear during our investment in Neurogen Pharmaceuticals. They were developing a revolutionary Alzheimer's treatment, with Phase 3 trial results scheduled for release in September 2015. 2 weeks before the announcement, Reed called me at 11 p.m. "Jason, I need you to liquidate our entire Neurogen position at the market open tomorrow." "What?" "We're their largest institutional investor. We hold nearly 8% of the company." "I've been reviewing the trial methodology," he said, his voice unnaturally calm. "There are serious flaws in their approach. The drug is going to fail." "Alex, we've been building this position for 2 years, the scientific advisory board." "Just do it," he snapped. "And then I want to establish a short position as large as compliance will allow." I was deeply uncomfortable, but I followed his instructions. Sure enough, when Neurogen announced that their drug had failed to meet its primary endpoint, the stock collapsed 72% in a single day. Our fund made $138 million by betting against a company we had supported for years. During the celebration dinner that night at Per Se, where Blackwell ordered $5,000 bottles of Bordeaux, I watched Reed closely. While others toasted our brilliant analysis, he seemed distracted, checking his phone repeatedly. That's when I first suspected the truth. Reed wasn't analyzing public information. He was trading on inside information. My suspicions grew during the Helix Therapeutics incident 4 months later. Helix was developing a breakthrough cancer immunotherapy. Reed suddenly developed an intense interest in the company, despite having previously dismissed their approach as scientifically dubious. Within weeks, we had accumulated a $420 million position, nearly 3% of our entire fund. 3 days before Helix announced surprisingly positive trial results, I accidentally intercepted an email on our shared investment drive. It was from an account I didn't recognize. Containing only a code phrase, the Jupiter protocol exceeded expectations. The sender was Dr. Michael Stein, Helix's chief medical officer. When the trial results were announced, Helix's stock surged 48%. Alpha Meridian made $89 million in a single day. I confronted Reed in his office that evening. "You're getting information from Michael Stein at Helix," I said, closing his door. "I saw the email." Reed's expression didn't change. "Be very careful about what you're implying, Jason. This isn't just unethical, it's illegal. The SEC... The SEC? Reed laughed. "Do you have any idea how many former Alpha employees work at the SEC now? How many regulators Jonathan has in his pocket?" His cavalier attitude chilled me. "I won't be part of this." "Yes, you will," he said, sliding a document across his desk. It was a trading authorization I had signed for the Neurogen short position. "You're already implicated. Besides, your bonus this year will be $7 million. Are you prepared to walk away from that? To never work on Wall Street again?" The threat was implicit but clear. I had a wife, twin daughters in private school, a mortgage on our Westchester home. I told myself I was just following orders, that I would find a way out eventually. That moral compromise haunts me to this day. Over the next year, the pattern repeated with frightening regularity. Reed maintained a network of doctors involved in clinical trials who provided him with advance information. We made another $48 million trading ahead of negative results for a diabetes drug from Meridian Therapeutics. What Reed didn't know was that I had begun documenting everything. I created an encrypted file with dates, trades, and communications that suggested insider information. I wasn't sure what I would do with it, but I needed insurance. The beginning of the end came in early 2016 when the FBI arrested Dr. Jeffrey Collins, a neurologist who had consulted on an Alzheimer's trial. He agreed to cooperate with authorities, and whispers of a major insider trading investigation spread across Wall Street. Reed became increasingly paranoid. He switched to encrypted messaging apps, held meetings in public parks, and began moving assets offshore. Blackwell called an emergency partners meeting. "We have a situation," he said grimly. "The government is looking into some of our healthcare trades. I need absolute assurance that we've done nothing improper." All eyes turned to Reed, who maintained his composure. "Our research is thorough and proprietary, but entirely legal," he said smoothly. 2 weeks later, Reed didn't show up for work. That afternoon, federal agents swarmed our offices, confiscating computers and documents. The Manhattan U.S. Attorney announced charges against Reed for orchestrating one of the most lucrative insider trading schemes in history, generating illegal profits of approximately $275 million. What followed was a corporate death spiral. Investors pulled billions from the fund. Alpha Meridian's reputation was in tatters. Blackwell claimed complete ignorance of Reed's activities, sacrificing him to save the firm. Dozens of employees were fired. I managed to avoid indictment by cooperating with federal prosecutors, providing them with my meticulously documented evidence. Reed was eventually convicted on all charges and sentenced to 9 years in federal prison. Alpha Meridian agreed to pay $1.8 billion in penalties and restitution, effectively ending its existence as a premier hedge fund. I testified at Reed's trial, recounting how he had systematically corrupted our investment process. As I spoke, I could feel his eyes boring into me from the defendant's table. When the verdict was read, he showed no emotion, but as they led him away, He paused by the prosecution table. "Enjoy your temporary victory," he whispered. "I'll be managing money again before you know it." I sometimes wonder if he was right. The finance industry has a short memory, and brilliant minds with profitable strategies are always in demand, regardless of their past. The system itself remains largely unchanged, still rewarding those who operate at the edges of legality in pursuit of profit. Today, I teach finance ethics at a university in New England. I use my experience to show students how easily the line between aggressive research and illegal activity can blur in the high-pressure world of hedge funds. I tell them about the warning signs I ignored, the rationalizations I accepted, and the personal cost of moral compromise. The money I made during those years is long gone, consumed by legal fees, settlements, and the divorce that followed the scandal. But I gained something more valuable: perspective on what truly matters. No bonus is worth sacrificing your integrity. No edge justifies breaking the law.